ICT Traders' first day at a hedge fund. Whoever is making these AI videos, shout out to you because they are pretty funny.
So if we break the inverse fair value gap, liquidity should snap back into the order block and...
Wait, what? Inverse what now?
Bro, say that again slow.
The inverse fair value gap. Nah. Are you okay, bruv? He's making words up. Day one.
Yeah, I mean, the thing is, 99% of all of these terms that you hear within the ICT, the SMC cult world is just overly complex for no reason. And a lot of the terminology is just flat wrong. So look, the reason you would be laughed at on a trading floor if you started talking about these ideas or concepts or theories or whatever is for a few different reasons. So first of all, there are millions of traders using that same strategy. If it really worked, the edge would be gone. And this is why you don't see Jim Simmons telling everyone about how he runs the medallion fund. Because if he started publishing papers describing his algos and everything he does, everyone would copy him and it wouldn't work anymore. Second of all, as I said, the explanations behind these terms are just wrong. People are not hunting your liquidity or your stop losses on the most liquid assets in the world, like the NASDAQ, the S&P, Eurodollar. They don't need to because they are the most liquid assets in the world. You will only ever see manipulation like stop loss hunting, liquidity grabs, and whatever else on illiquid assets. So things such as penny stocks. And look, a lot of market moves are actually random, especially on lower timeframes. So to say that there's a liquidity grab, you need to think about who is grabbing that liquidity from you. Well, likely no one. So what happens is buyers, and then sellers step in and push price back down. It doesn't mean the markets are going to be perfect. So if we've got highs like this, it doesn't mean price is going to come to the high and reject straight away. We could see it poke out a little bit and then pull back into the range or whatever it's doing. And it doesn't mean there's any funny business going on. It just means that's the markets doing what the markets do. You cannot use a 1 pixel line and say that there's liquidity above and below is whatever else, because you're putting expectations on the market for them to move perfectly, which they don't do.